It is Wednesday, 9/11. We will never forget. This day had a huge impact on my life. I remember exactly where I was and what I was doing. The clearing arm of our brokerage firm was in the World Trade Center. I'd been in the World Trade Center many times. So this is a very mournful day for me. The market has been all over the board. So we're going to take a look at that in just a minute. I want to go back and review our previous picks. I am flying solo today. So I will be reviewing Harry's picks as well, which were excellent as usual. So I'm going to go through and click on this little watch list that I created. This was my bullish pick last week, MDT. And you might recall that we had been in a situation where the market was compressing near the all time high. We had a major news event coming up, which was the jobs report on Friday, and we didn't know what that reaction was going to be. Could have gone up, market could have gone up, market could have gone down. So we really had to wait for that news, and that's why both Harry and I left you with a bullish pick and a bearish pick. So MDT was the bullish pick, and you can see on the daily chart how the stock has actually held up quite nicely. But yes, the market has been probing for support. So it's been relatively weak. This is the advantage of trading relative strength and relative weakness. That is the edge. If by chance you catch yourself on the wrong side of the market, the fact that institutions are in there buying the stock is going to provide you with a cushion, an opportunity to exit that trade. Now you can see that's the candle from Friday. And look at how well the stock weathered that big market drop that we had. So AAP was one of the shorts that I really wanted to take, and I was pretty sold on taking that AAP short during the course of the presentation. And you can see how that stock has continued to move lower. We'll put up the 15-minute chart, and there you can see what it's done over the course of the last 5 days. Deep sell off from 42 to 38. That was an excellent pick. I also had CELH, which popped up on a bearish explosion alert. And that was the move that we saw. And right about it in here, I think it was probably around the $33 level or so, is where the live event took place. You can see that the stock is marginally lower, but it has been able to find support. So we didn't see any additional selling, and that was some big volume. I do suspect that the stock is fairly weak. Take a look at the D1 chart, and it's just going to take a little while for us to break below this support level. How would I trade it? Click GTC, click on the lowest candle there. Now I have an alert line so that if it breaks the support level, I'm going to get an alert. BAC is a bearish pick that I highlighted on Sunday. And I like the fact that the stock was breaking below the 100-day moving average, long red candle here. And you can see how the stock has been finding its way lower. And here is the reaction Monday morning. So we come in Monday morning and the stock gaps higher. You would not want to take a short with the market moving higher and the stock gapping upward. There's no reason to take a short position. However, yesterday we did have a sell signal on an M5 basis, and the stock had broken through the prior day's low. That is where you can take this short, and somewhere around the $39 level all the way down to $38. That's a big move for BAC. It's a bank, so it doesn't move much. The option implied volatilities are extremely low, and the bid ask spreads are a penny wide. So you have good trading opportunities like that. So let's take a look at, and BAC is down a little bit today. You can see you've got a little buy signal in here, but in general, the stock looks fairly weak to me. So I would only be favoring the short side for this one. And you can see how that resistance is going to form at the 100-day moving average. Let's take a look at Harry's bullish pick, which was PayPal. And he liked it right in here. We'll go into the 15-minute chart so that you can see it. And let's see, that was right in here, was the last live event. Stock has been trading lower. Okay, so along with the market being down, PayPal was down. You wait for that news to come out Friday, you get that big market drop on Friday. Harry's bearish pick was on SPY. And I had to go back and look at the strangle that he had purchased, but I believe it was the 548, 552 strangle that he bought on SPY, and that was expiring Friday after the close. And let me check my notes here. He paid $4.95 for that. And you can see here that the low from Friday was around $5.40. So the 548 puts would have been in the money by $8. So that spread would have been making $3 just based on intrinsic value. Now, of course, the option implied volatility has got really jacked up Friday when we had this huge decline. So chances are you could have gotten out of that spread for much better. In total, we've got a lot of market movement right now. We've been giving you bullish and bearish picks, and they've been performing quite well. So today we came in, and let's take a look at the D1 chart, and let's do some technical analysis. Okay, so what do we got here? Friday, we come in with this long red candle. This is bearish, okay? Typically, we get a long red candle like that. We're going to get a little bit of a bounce afterwards. We breached the 50-day moving average. We breached AVWAP-Q. We had a lower high double top. Everything is in place. This looks like a really good move. So when I did the video Sunday, please go back and watch the video. Make sure that what I'm telling you right now is actually what I recorded. I'd mentioned, yeah, I'm looking for a little bit of a bounce in here on Monday and Tuesday. Why? Well, because if you look at every other long red candle, we've had retracement and we've had these little mini bounces. What do we want to see out of this bounce? What tells us that we're on the right side? Well, we'll take this red candle, for instance. You've got your 2 days worth of bounce. You preserve half of this long red candle. That tells you that sellers are still engaged and they are taking every opportunity to sell, sell, sell. They're looking for opportunities to reduce risk at favorable prices. Well, what did we see here? Well, first of all, the market opened right into the middle of this long red candle. Yeah, okay, not my favorite setup. And then it closes right at AVWAP-Q on Monday. Yesterday, the market tried the downside and it resulted in this long bullish hammer just below the 50-day moving average. Okay, well, now that's not what I want to see because, again, if we spend any time in the upper part of this long red candle, that tells us that sellers are not that aggressive. If they were, they would be pounding bids on every attempt to rally the market. Today, we get another decent drop early in the day. And again, we bounce above the 100-day moving average. So what is all this nonsense telling me? Well, my takeaway is that we're seeing an awful lot of program trading. You get this big drop on a D1 basis, a drop of 10%. I wanted to see this halfway point preserved, which puts us at about the 50-day moving average. I don't mind a bounce to that level, but once we get through it, all bets are off. I'm not bearish anymore because this should not be happening if sellers are aggressive. And if we look at the price action from Friday, This long red candle should be holding, but it's not. Here we are, right near the top of it, right near the open of it. And certainly, if we get above it, that would not be bearish at all. It would be very neutral. As I zoom in to the 5-minute charts, you're going to see exactly this type of price action and this type of price action on a 5-minute basis. Today's another classic example. Let's go back a few days and take a look. There is your Friday decline. Okay, everything's great. There's your open on Monday. Try the upside. This selling pressure, those sellers aren't going to go away easily or quietly. They're going to test the downside. As soon as that support level was established, look at the strength of that rally. But then we get another pullback. So this is all program driven trading, in my opinion. You open up, you gap up, boom, you try the downside. Now, we aren't nearly as concerned about 4 stacked red candles like this. Now, they were long and they were red, and that typically is going to be a very legitimate move. But look at this rally back. Pretty incredible. By the way, for those of you who use OneOP, got a beautiful bearish cross here on Friday. That set us up for this entire short. Got a beautiful bearish cross right here. That set us up for this short. We got a beautiful bullish cross right here. That set us up for this long. We've got a beautiful bearish cross right here. Hello. Going to the next day, you can see we've got the 1OP indicator trending lower. Get a nice bullish cross in here. Catch that move. We got this nice bearish cross up here today that set us up for this move. Get a nice bullish cross down here. Look at how predictive this indicator is. Took me many years to design and perfect this indicator. It's fantastic for trading S&P futures. It's what we use to time our entries and exits intraday, and it also is the basis for our trade signals. So the conclusion is, if this was a legitimate move, and I thought this was a legitimate move, the magnitude of this drop today was much bigger than what we saw in here. Okay, you get 4 stacked red candles. Okay. You get close to the prior day's low, and then you have a nice grind back. I could see this reversing. I could see this reversing with mixed overlapping candles in here. So that didn't come as a surprise. This is just complete volatility. And I suspect that once this bounce runs its course, we're probably going to roll over and test the downside again. So I'll be watching for 1OP to get extended here. I'll be watching for tiny bodied candles in here, and then we'll be able to gauge the price action and look for a possible short to be setting up. So that's kind of where we're at right now. I'm going to take a look at some of your questions in here. I probably going to have quite a few because the market's been all over the board. My conclusion after all of this activity during the last 6 weeks is that we've had lots of opportunities for the bears to demonstrate that the selling pressure is heavy, that the market is rolling over, and that the market is going to go down. After seeing all of these bounces, the magnitude and the duration of the bounces, it's telling me that much of this activity is nothing more than program driven. The market is still searching for a catalyst. It's still searching for direction. I really can't be anything more than mildly bearish, neutral to mildly bearish, but I'm pretty neutral in here. And if you see a big move in one direction, you should be watching for opportunities. You should be taking profits on those positions, watching for opportunities because we're likely to go the other way. That's what we've been seeing for many, many days now. Until that's resolved, until the market actually makes a sustained directional move one way or the other, this is just a bunch of chop in here. That 100-day moving average has been almost tested twice. from a bearish standpoint, what would get me bearish? And this is important for you to always ask yourself, what would get me bullish or what would get me bearish? And then define the time frame that you're talking about, because it's going to be obviously different for a 5-minute time frame than a D1 time frame. How do I get bullish? Well, given that the market has been testing this resistance level, I would need to see a breakout above this little trend line, which I will draw for you. And you would just connect that high right here with that high right here. If the market can get through that with gusto. Okay, so I'd like to see a long green candle with volume. Then all of a sudden, I can start to get more bullish. If the market can break convincingly below this 100-day moving average with follow through, okay, none of this 1-day crap. I need to see some follow through. I need to see half of that long red candle preserved, and then the next day and the next day, I need to see follow through. And I'd like to see selling late in the day, not buying. Okay, then I would feel like the move is legitimate. You've got this upward sloping trend line here that coincides with the 200-day moving average. A breakdown below that would certainly get me more bearish. As long as we're between those two boundaries, I expect to see probably more of this back and forth trying to determine which way we go. So stay flexible. Uh, Keep your swing trades to a minimum. I can't tell you what the market's going to do from one day to the next. We have the FOMC statement coming up a week from today. Everyone's expecting a 1/4 point rate cut. I think they're going to get it. But now the focus is not so much that 1/4 point rate cut as it is, what is the Fed going to tell us about the rest of the year? Are they going to paint a picture that there's another possible rate cut in October, November, or December? And that's what the market's always going to be looking for, that next fix, if you will. So let me take a quick look at some of your questions here. And if you've got any stocks that you'd like me to look at, please give me a time frame so I know which type of chart to bring up. CVS, does that look like a good short? That's just a suggestion. Let's take a look at that. And I'm going to take that watch list down. Yes, CVS has been a nasty little stock. And yes, you're breaking through these low plus trend lines. There's a low minus that you're actually breaking through. You're below all the major moving averages. Very nice pick. Yes, I do like that. Let's take a look at the M5. So here is your clue. Market sells off hard, bounces hard. I'm going to do something right in here. I'm going to this will help me keep an eye on what the market's doing, because if I suspect that this bullish cycle is running its course and the market starts to roll over, I want to know about it, because I'm going to be busy trying to look at your picks and answer your questions. So this will give me an opportunity to look at it. What would get me bearish? Okay, I said earlier, you got to know what is going to get you bullish and what's going to get you bearish. Okay, what would have kept me bearish here was a test of VWAP and a rejection with this 1OP cycle concluding and rolling back over. That would have told me from here, we've got, at very minimum, we're going to test the low here, and I would be getting short up in here. That's not what I got. Okay, so check that off. I'm not as bearish as I was in here. Now, what would get me bearish? Well, I would like to see tiny compressed candles in here. At least half of this green candle has to be given up on a wham long red. Then wham, I'd like to see another long red take out the low of this long green candle. That's why I put the alert there. That would start to get me bearish, especially if I've got a bearish 1OP cross. I'll have everything lined up for that trade. What would get me bullish? Well, if we go through a bearish cycle like this, and the market stays right here near its high of the day, that's what we call a benign cycle. And then on that next bullish cross out of that trough, if the market's able to tread water, tread water, tread water, I would get a little bit more bullish and I would be inclined to try the long side. So again, know what patterns you're looking for. When the market rebounded like this, what did CVS do? Nothing. Couldn't get off the deck because sellers are anxious to unload stock. They don't care that the market bounced like this because they're trying to exit their position and they keep pressure on the stock. This is a very nice short. So, do I need to act on it with the market rallying higher like this? I don't. Why don't I click on the low of the day and set an alert? The market rolls over, the stock rolls over. You can see VWAP preserved. Then I'm going to have a very nice short candidate. TSM just came up. I had set an alert on that. So we'll take a look at that. You can see how it's making a new high of the day. It's on a buy signal, decent volume. TSM looks like it could be an excellent candidate for a long, and it's still got some room up to the 50-day moving average. So TSM looks pretty good for me right in here. I just wish that this bullish cycle weren't kind of getting close to the end and that we were earlier in that cycle. So I'm going to continue to look through CVS, price action. So when we get a rate cut, does the market tend to implode? Uh, no, in fact, when the Fed initially starts cutting rates, usually for about 6 months or so, the market price action is pretty good. The big variable and what really is going to determine what the market does, in my opinion, is economic growth. So if we start to see that there is a big undertow and that economic numbers continue to deteriorate very quickly, that's not going to be good for the market because the Fed's going to constantly be playing catch up. And then, yes, if you get rate cut, rate cut, rate cut, you might get 2 or 3 rate cuts in, and then the market's going to get very worried because it's going to go, uh-oh, this is a very slippery slope that we're on. We're seeing severe economic contraction, and the Fed is trying to play catch up. Did they wait too long? That'll be the big question. So in the early stages right now with a rate cut, I think that it's going to play pretty well for the market. But again, what they plan on doing the rest of the year is really what's going to be in focus. Markets already discounted the quarter point rate cut. They're looking at what's going to happen the last 3 months of the year. What should you look at? What happens? I mean, stocks go in and out of relative strength and relative weakness. And so when you see a stock that's got good relative strength and it kind of goes out of phase and it turns relatively weak, what should you do? Well, if you're looking at longer time frames, you always want to look at a D1 or a H1 period for relative strength because we want to make sure that we've got that longer term tailwind intact. So if you've got a D1 stock with relative strength, it's going to be much more meaningful than an M5 stock with relative strength because it's a longer time frame. And we're looking at the last 12 periods. So for a 5 minute chart, you're looking at the last hour and what has the stock done in the last hour. Just intuitively, if you think about this, okay, a stock gaps up and it continues to surge higher. It's going to be strong relative to the market. It's going to be incredibly strong relative to the market. Just because that stock goes through a period of relative weakness, it means that the stock can't keep going up forever. Even if it just flatlines and the market ticks a little bit higher, that stock is going to be weak relative to the market. And that's what you have to appreciate. So when it goes through a period of relative weakness, what do you want to see in the stock? You want to see it hold up very, very well. You want to see lots of resiliency. So we could take a look at some bullish or bearish stocks. Let's take a look at IBM and see what it's doing today. And so IBM opened high. Look at that relative strength. Okay. And now you can see that because of this earlier move, all of a sudden it's weak relative to the market in here, even though the stock has made a considerable move. Well, how could that possibly be? Well, this is real relative strength, which accounts for the ATR, the uh, implied or the volatility of the underlying stock relative to the volatility of the S&P 500. And so when the S&P 500 makes a huge move like this, and because this stock is more volatile than the S&P 500, it's actually going to look weak relative to the market because it's not making as big a relative move, volatility adjusted. But does that mean that IBM is weak? No, it's actually quite strong because look, the market is below the prior day's close and the stock is convincingly above the prior day's high. So this stock still has excellent relative strength, and we can certainly see that on a D1 basis. So when you're looking for where you can really anchor your opinion, you must use longer time periods. M5 is going to fluctuate a lot and it can be misleading at times. So always look at the price action. Let's see. You wouldn't be short biased anymore. SPY and striking distance of the 50-day. Yeah, sure. I mean, I'm pretty neutral after seeing the price action. I took some bearish starter positions in early August, and I've been able to pretty much get out of them unscathed. But after seeing that bounce, I certainly wasn't going to add to those positions. Kind of the same thing looking at the market today. If you were in some stocks with relative weakness, and I'm going to bring up Target because I really like Target. I thought that was an excellent short today, but you would only take a starter position because of the volatility that we've seen over the course of the last 6 weeks. And there you go. So if you take a small starter position, which is what I was telling everybody to do early in the day, I'm like, we've been all over the board the last week, and we've seen these big drops followed by big bounces. So I can appreciate that you'd be very nervous taking a short in here, but this short actually, this move is different than the ones that we've seen previously. So I'm not going to be expecting this. I'm going to be expecting a move to that VWAP and then a rollover and continuation. And if I get that, then I can add to a position like Target. But I didn't get that. Here we go again with this big ass rally. And this is a strong, substantial rally. And look at this on good volume. But if you pick the right stock, you're going to be fine. And you can see how maybe Target is just a little bit off of your entry point, but it's right there. You didn't get your ass handed to you because you picked the right stock. You look for those technical breakdowns. You look for that relative weakness. That's how all of this works. If you would have traded S&P 500 futures and you would have been short in here, you would have covered somewhere in here for a gigantic loss. And that's the edge that we have trading stocks with relative weakness. Why all the picks that Harry and I show you perform time in and time out. You haven't been trading for 2 years. Is this a good time to come back in? Well, I think that any time's a good time to come back in. I think that the market is always going to present challenges for you. The main thing is that after time off, you do get rusty. So you should start with one share, gradually build your track record, gradually get your bearings, because it's going to take time for you to understand the types of patterns that the market is currently in. It's also going to take you time to identify the groups and sectors that are relatively strong or relatively weak. Plus, it's just the whole mental aspect of trading and kind of getting back into the groove of things. So, yes, I would say this is an excellent time. There's never a bad time to get back into trading as long as you start very gradually, start with small size and hone your skills. That's really what it's all about, because even in this type of volatility, you can make money. And we've had a lot of people making really good money in the chat room. This is like a day trader's paradise in here when you start getting this type of intraday market volatility. Looks like we're just bouncing between the 50-day and 100-day moving average. I agree with that. CVNA, Carvana. That was actually a nice bearish move yesterday. You can see it's a really good sell signal. Let's zoom out a little bit more. I love this. When I get a sell signal and it's early in that sell signal and we break the prior day's low, I love that stuff, especially when the stock has heavy volume. And you can see how it has bounced with the market. It bounced yesterday, today, probed for support, but this is a higher low, so it didn't have nearly the selling pressure that we had yesterday. You can think about some of the groups and sectors also. Carvana, they sell cars. So if the economy does start to weaken, GM was pretty weak yesterday. Carvana, weak. Advanced Auto Parts, weak. So that whole sector is starting to have some issues. We breached that 200-day moving average. I think this is going to be a nice short. And you can see that it's already on a sell signal D1. You can see how the buy and sell signals have performed on CVNA. If you haven't come in and taken the trial, by the way, no harm, no foul. All we ask you for is a legitimate email address, and we ask you to confirm it. There's no credit card information required or anything. Come in, try our trade signals. You can use Option Stalker Pro with our Intrinio data feed that's real time. It's only one exchange, IEX, but it'll still give you a good feel for how accurate these buy and sell signals are. So what do I do with Carvana? Create alert, select SMA, and below the 100-day SMA, add that, save it. Now, when it breaks below the 100-day moving average, I'm going to get an alert. You should use alerts all the time. You should primarily be alert driven, not position driven. Positions eat up your capital. Positions involve you emotionally. Alerts don't do any of that. Every time you get an alert, it's an opportunity to review what the stock is doing, look at the price action of the stock, look at the price action of the market. Is everything still conducive to taking a trade? Yes or no? If not, you can just set another alert at a different price point that you feel is very important. If it is relatively important and you feel confident in the trade, well, then you can take it and you know that you've got a good entry point for it. Spend a lot of your time when the market's not giving you anything to work with. That's when you should be flipping charts and setting alerts on multiple time frames. EFE, what do I think of that? Is it reaching a support level at $29? Yeah, PFE, I mean, it's stuck in this trading range. There's your high, there's your low, choppy, 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 choppy. There's nothing there for me. Okay. I just don't see anything worthwhile there. So if it can get below the 100-day moving average, there might be a trade. I can click on one of our trend lines and I can set an alert based on a breach of that trend line. But apart from that, I just don't see anything in PFE that's interesting to me either way. Yes, it got above the 50-day moving average, it got above AVWAP-E, but I mean, you can see that it does that with regularity around these moving averages, and then it just falls back. So I'd like a stock that's actually got some decent momentum to it and some nice orderly price action versus this, where it just chops back and forth. On TGT, what would you do? Would you exit the trade here? Uh, well, what is your duration? Before you take a trade, you should know I'm looking for a day trade. Okay, if you're looking for a day trade and you're hanging on to this stock, then you're kind of hanging on by your fingernails right now when the market is rallying like this. If you are swing trading a stock like this and you get the market to roll over, this is going to give me confidence to add to the position. I would be taking a position on this and adding to it if I start getting the market rolling over in here, provided that I'm looking to swing this for 2 or 3 days because it's doing exactly what I want my short positions to do. I think I might use TGT as my pick for today. So, mind you, I'm kind of neutral given all the market price action, but TGT looks great to me. Okay. You don't get much of a bounce here. It's below a VWAP. We've got this giant rally in the market. If I click that right there, I'm going to get an alert. And so I'm going to do that. And that will tell me that it's okay to add to the TGT position. Then I start getting a legitimate market rollover here with a breach of these two trend lines. Remember, I want to see that long green candle erased. I want to be through that open, and I don't want to do it in a wimpy fashion with mixed overlapping candles down, up, down, up. No, red candle, red candle, red candle, just like this. Okay, I'm gonna feel pretty good about adding to that short position, especially if the low of the day is also taken out. So I click on that as well, and I'll know if the stock makes a new low of the day. So back to your question, what's your time frame? What is your confidence in that time frame? Are you confident that the market is going to go down over the course of the next 2 or 3 weeks? Maybe you are. Maybe you're confident the market's going to go up in the next 2 or 3 weeks. I'm not given the price action. So if I'm in a day trade right now, I'm looking for that market rollover. I've weathered the storm. I like what I see in the stock. When I get that market rolling over, I might add to a day trading short if it happens in the course of the next half an hour, 45 minutes or so. It's got to be convincing. If I see the stock rolling over, I'd add to the short position day trading. But then, yes, I know that any kind of market move here, I got to watch for signs of support. I start getting a bullish 1OP cross this afternoon. I'm probably going to be erring on the side of caution and saying, all right, this stock has performed. I'm ready to take some profits. So I've got to be in kind of a hit and run mode if I'm day trading in here. It's not to say that there aren't big moves that are taking place on these stocks. They're huge. We just saw what I believe TSM And so if you identified TSM as a really good short earlier today, sorry, I'm having a little bit of an issue seeing my keyboard. So if TSM is a long that you were looking at earlier today, and you've got that bearish cross right in there, and you're fine with it getting down to the closing price from yesterday, and now you start seeing it lift off in here, yes, you can take a position here, you can take a position here and add to it. This is a stock that you've identified that you want to be long. You've got excellent profits in here. I don't know, it's probably about a at least a $2 move. So we're not talking about scalping nickels and dimes in here. We're talking about considerable moves. How do you decide to go and wait and see mode instead of adding to short swing positions? I think I've just answered that question for you. It's dependent upon what the market is doing and how the stock is responding to that market move. Thinking about shorting CVNA, I mean, I think CVNA looks like an attractive short to me. I think that you've got to, on a swing basis, you got to have some confirmation that the market is not going to get through the 50-day moving average. And look, we're knocking on that door. If you get a breakout above that 50-day moving average on SPY, I don't think I would want to be short any stock on a swing trading basis, especially if I've got the FOMC statement coming up next week. That's one of those wait and see moments, especially when you've got that kind of price action recently. Very undecided, could go either way. Low probability taking a stand one way or the other. You need to have those price patterns that I had mentioned to you earlier to be able to get behind a move and to be able to weather something like the FOMC. So I'm going to reiterate this point because it's very important and it's all technically driven because the technicals don't tell us what institutions are thinking. The technicals tell us what institutions are doing. And when you get a sell off like that, you want to see resistance and not a big bounce. If we only got to the 100-day moving average and that we already started to see it roll over considerably, that is super weak price action. Am I willing to let it go to the 50-day moving average to see what it does? Yeah, I'm not adding in here. I'm just waiting to see. And I'm expecting to see that weakness. Okay, we bounced a little bit higher than I thought, but if there's legitimate selling, they are going to play whack a mole with this thing. And when they don't, there's important information in there. The bid is much stronger than I thought. So I need to adjust my thinking and not add to the positions. And the same thing holds true for that long red candle that I discussed earlier today. What am I expecting it to do? What do I want to see it do? How do I know if I'm wrong? Those are the questions that you have to answer as a trader every single day. And the clues that I go on, I've explained to you today. So that's how you manage position. That's how you add to position. You get this wimpy little bounce. You got your starter shorts on in here and they're performing. And you get this wimpy little bounce to the 100-day moving average and it starts getting rejected. That's when you add. Hey, we took out this low. That's when you add. Hey, we took out the 200-day moving average. That's when you add. You're looking for that constant confirmation. And the reason that you can add on those subsequent breakdowns is because your average cost is way the heck up here on every ad. So if the unexpected happens and you get a big bounce, very worst case scenario, you always know you can scratch the trade. That's how you manage your profits. That's how you know when to add, when to take starter positions, when to exit those starter positions, trying to manage your losses, keep them small, know what you're expecting, what you want to see. And when you get that confirmation that, yes, what I thought was going to happen is happening, then you can add to the position. All right. Let's see what this is doing. Somebody's mentioning a bearish cross on 1OP. Starting to get that bearish cross in here right now. What do I want to see? Would like to see some red candles in here. A move of this magnitude is not going to be easily reversed, so it'd probably be red candle, try and rally up, lower high double top to this move. Then I can get pretty confident. Okay, so I don't think we're going to get long red candles right through this with ease. I think it's going to be a little bit more of a process, so I'll be watching that. Again, how do you know that? Why am I looking for a double top? You said you know, take out the open of this long green candle and long red candles. This move and the strength of this move is telling me what to expect here. Okay, this is pretty dang strong. So I need to see that drop, but I don't want to be biting on that because we easily could see a bullish flag off of that. Whoop, right up. And then I'm eating crow. I don't want to do that. This is a strong move. I'm going to respect it. Drop, try and rally up. Now I see additional signs of resistance. Sellers are more aggressive because they don't feel we'll get back to that previous level, and they're keeping a lid on the price action. That I will short, especially with this bearish cross in here. Until then, not real interested in it. So no, I'm not going to be shorting anything. If I see a short setup, I'll trade some futures. I'll put a position on. I'm not seeing it right now. On a sell signal that happens late in the day, you set an alert at the low of the day. Upon the break of the low of the day the next day, it is often too early to get a read on SPY direction, in which case do you short? So if the market is doing a whole lot of nothing and just trying to figure out what it's doing, then I might take a small short position in that stock because I've already looked at the D1. It's weak. I know I've got an M5 sell signal. I know the stock is below the prior day's low. Those are all bearish signs. And the high of the day and the low of the day are your first signs or your first minor resistance levels. So for me personally, if I'm trading a stock and it can't even get above the prior day's high, I'm not interested. I'm not going to buy that. If the stock can't get below the prior day's low, no interest. It at least has to do that because I want blue skies ahead. I want all resistance removed if I'm going long. I want all support removed if I'm going short. So that's why I lean very heavily on prior day high, prior day low. And so if I come in and I've got a stock like Target, let's say, and I start the day off with blam, long red candle. Okay, bearish 1OP cross. Okay. I think I'm going to be pretty willing to try that short earlier in the day because it's supported by what the market is doing. And so always market first. And we could take a look at Target and see what it's doing. And take a look at Carvana. Carvana didn't have a sell signal the previous day. It had one right here. But let's take a look at TGT. I think it might have had a sell signal the previous day. It did. Okay, so there you can see how the stock rallied pretty considerably off of that low. So it was going to take an effort to get below that low. And then, yes, if you get your alert right in here, the target looks pretty dang good. You know, we took out the prior day's low with ease, and the D1 looks weak. And I've got long red candle and follow through on a bearish 1OP cross. I don't have to really wait. I've got enough evidence to tell me this is going to be a good short. All right, it's taking me a little while to read through your questions. MDB. is a stock that you'd like me to take a look at. Very choppy. I mean, that's the first thing I see on this is wow, this thing, even when the market's been making nice directional sweeping moves, it did today. It made that same sweeping move, but it's pretty much following what the market's doing in here. It is above the prior day's high, so that's kind of nice. D1 still in this compression right in here. Okay, there's nothing for me there. There is absolutely nothing there for me to trade. Click GTC, that high, that previous high, that is a minor resistance level, coincides with a high plus trend line. If it can get through that, it's got a lot of room to get up in here. But right now, it is trapped in this compression. No bueno. There's nothing there for me. Okay. It gets through that level, which is around $300 on decent volume. I got something to trade. Right now, look at this crappy little volume in here on a 5 minute basis. No, 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 no. This stock also is starting to hit resistance when the market was still going up. And I know that visually, just looking at it, and you can see a couple of long wicks in here. This stock is probably likely to roll over. I mean, yeah, you can look at it and go, hey, this was a nice buy signal. Well, yeah, it was a nice buy signal, but I really didn't have anything more than an M5 trade signal to go off of. And I'd like to have support on that D1 basis. In what instances should you turn a day trade into a swing trade? If you are seeing number one, like right now, we don't have the market. We do not have the market going either way for us. So it's going to be very difficult for me to justify taking any swing trade. Okay. If the stock is absolutely crumbling like AAP was, then I can add a little bit to the position, but I have to temper my bearishness on that stock. And I certainly don't want to build a big position. If I have the market breaking out, as I'd mentioned earlier, to the upside, making a new all time high, breaking below that 100-day moving average, the types of candles that are consistent with this is a new trend that's starting, then I know I have the market tailwind. Okay, now I start zooming in on what the stock is doing on a D1 basis, what the stock is doing on an M5 basis. And if I happen to get on a really good position that I added to during the day, and the stock is actually performing as expected and the market is performing as expected, then I can start considering holding that position for a longer period of time and perhaps even adding to it. So that's kind of the progression that you go through. And you hear about quarterbacks having a progression and they go from one read to the next read to the next read to the next read. That's what you're doing. I mean, you're doing all this on the fly, but your considerations are what's the market doing longer term, shorter term? What's the stock doing longer term, shorter term? Are all the tumblers lined up for all of the four that I've just mentioned? If yes, excellent. We've got a good opportunity. What's my opinion on the recent economic reports, the jobs reports, bullish, bearish, uncertain? Honestly don't have a huge opinion one way or the other. And even when I do have an opinion on it, I just follow price. And you're going to hear a ton of analysts, and you probably find just as many bullish analysts as bearish analysts right now. And you don't know who to trust, and they are all fundamentally based. So I try not to interpret what the jobs report actually looks like, because if I would have done that, then I could have come in last week and I could have gone, hey, 140,000 jobs. That's pretty good. They were looking for 160,000. And it sounds like we're not seeing the jobs fall off a cliff because the JOLTS number came in a little weak and ADP came in a little weak. So this is a good jobs number. I think I'm going to buy this. That's what you got. A nice little buy there. Uh-oh. And then we got a 120 point S&P drop after that. So don't play junior analyst is what I advise everyone. Don't pretend like you're an economics expert and like you know what's going on. I've got an MBA with a finance minor, so I would like to think that I know more than the average Joe. But as soon as I stopped trying to interpret economic releases, my trading turned around and I started to make money because I was no longer trading what I think. I was trading what I see. And what I see reflects what institutions are actually doing, not what they are telling you, because they're often two different things. Institutions have their research departments and their analysts, which are separate from their proprietary trading group. Okay. Two completely different things. What they're saying and what they are doing do not always line up. So just follow price action. Price is truth. On OSP, what would be a good search for day trades, long, short, using new trade signals? Can those searches be set up for alerts? Should these searches be run at a certain time in the morning? Yes to all of the above. We have canned day trading searches and we have canned swing trading searches. Whatever your time frame is, you would focus more on those. I like using green royal flush for both day trading and swing trading because I know if the stock is strong on a swing trading basis, then I am likely to have a good trading setup for a good setup for day trading as well. So these are some of the stocks that have come up. IBM, take a look at that D1. These have trade signals across every time frame. Really nice, strong stock. And we'll go through and we'll take a look. There's a bullish flag formation, got a trend line there. You can see stock has been moving higher, even when the market has been selling off. RDFN looks pretty dang good. Look at that 5-minute price action above the prior day's high. Decent volume, not great volume, but we're at least got some decent price action in here. So let me go in and go back to the current day. So we're mindful of what's going on here. Just going to set another alert right in here. It's a little bit of a compression here. Just want to know what the market's doing. This way I don't have to watch it. Let's take a look at some bearish searches. And then, yes, what you can do, I'll go into red royal flush. And by the way, the searches, just by nature, you're going to see more candidates on one side or the other. And so there'll be times when you see lots and lots of bullish candidates in the searches, but very few bearish candidates. It's telling you which side of the market you should be focusing on. Okay, so this is telling me, probably should be favoring the short side. So, can you set alerts on these searches based on the trade signals? Yes, I can. Etsy is not on a 5-minute sell signal. You can see these spots are blank. Disney, no. Dow, no. CLF, no. So what I can do is I'm going to right click on that column header, create alert. What would I like to do? And notice all of the stocks in that search are listed. Alert when stock is weak relative to the SPY. Well, I want to select, whoops, I'm going to mark that off. I want to select trade signal, alert when sell signal, M5, add that. And if any of these stocks go into an M5 sell signal, I will be alerted. They could be on an exit right now. So sell signal, exit. When they go back onto a sell signal, any of these stocks, I'm going to know about it. I can go through every one of these searches and do similar. CVS was one of the stocks that someone asked about earlier today. There's your short, there's your exit. So if this goes back into a sell signal, I can also just create an alert right off the chart, create alert, trade signal, sell, 5 minute, add it, done. So yes, gosh, can I create a search? I'm already at the hour mark. Can I create a good bearish search based on a trade signal? Yes, so let's do that. H1, I'm only going to do bearish right now. Okay, I could do the same thing for bullish, and I'll show you how easy that is to do as well. Something that I'll talk about with creating searches. If you see a stock that has fantastic pattern, one that if you saw it again, you would trade it a million times. What you do is go into custom search and start identifying what variables in that chart make it so attractive. And then go in and start adding them to custom search. And as long as you see that stock, you can continue to add new variables to get closer and closer and closer to what exactly is it about that stock, all the characteristics. So you cast a wide net and then you draw it in. And as long as that stock is on that search, eventually you're going to find out what those characteristics are that you really feel comfortable with and how to find that stock and similar. So trade signal H1, gosh, if it's on an M5 sell signal right now, it's going to be pretty dang weak. So I could add that. I don't have to. Let's leave it off for now. Cast a wide net. I'd want to see a stock that's below the prior day's low. I've kind of already mentioned that. I'd like to see some good option liquidity. So let's ratchet that up to maybe a -2, not be too restrictive. Let's look for some good relative volume today. So maybe 20% above the average volume. Let's hit scan. Hey, okay, that's not a bad list, right? I mean, we could knock through that list pretty easily. So now we can start adding other characteristics. How about the stock was above a major moving average yesterday? Could have been the 50, could have been the 100, could have been the 200. Today, it's below that moving average. We got heavy volume below the prior day low, H1 sell signal, good option liquidity, breakdown below a major moving average. Ooh, we got some candidates here. Let's take a look. Take a look at that D1. All right, there's our major moving average. We've got a nice little downtrend in here. We've got room to the 100-day moving average. XOM, pretty choppy, but through that 200-day moving average, that could also be a nice candidate for us. And I'm going to add one other variable here. I don't particularly like to have ETFs in the search. So how do I find a bullish search? Well, I could hit flip side, which is going to turn all of the variables selected bullish. And now I've got a couple candidates there. Yeah. Oh, yeah. Guess what? ARM is your long pick of the day. Love it. Horizontal breakout. I'd like to see a little bit more today, but I like this. Okay. Higher low, bounce off the 200-day moving average, above AV E, above the 100-day moving average, room to the 50-day moving average, getting through this horizontal resistance level. What did it do during the market drop today? It was still above the prior day's close, even with a 90-point S&P drop. As soon as the market found support, boing, and now it's making a new high of the day. Beautiful stuff. Look at that volume. Bye bye bye. Bye bye bye. Bye bye bye. Bye bye bye. They don't care that the S&P went down today. These guys are in there supporting that stock and buying it. When I review ARM on Sunday, I'm pretty sure it's going to be trading higher, even if the market continues to chop around. Obviously, if the market bottom of the market falls out and we get a 200-point S&P drop, then no, it's probably not going to be higher. But if the market does what it's been doing, this stock wants to go higher, and I can tell that there are buyers. So target's your short, ARM is your long. And that's the search you would do. NCLH was the other stock that showed up on that search. Also, getting through this horizontal resistance above the 100-day moving average. You've got that sell signal still on a D1 basis. That's going to be harder to move than an H1 signal. And there's your H1 buy signal right there, which was one of the key variables that we had in that search. Yeah, I like it. Did you see how easy this was to construct? The possibilities are just absolutely limitless. So custom search is an extremely powerful tool. All right, let's see if we can knock off the last few questions here and continue to scroll through here. Asset managers want to buy every single dip. Yes, right now they are buying every single dip, but some asset managers are also selling every single rip. And that's why we are seeing that selling pressure as well. Price is breached above the M5 trend line. So I believe I just set this. Still got to get above the 50-day moving average. So nothing too exciting on lift there right now, but I am going to set a GTC alert right there. So not only do I want to get through the 50-day, I want to get through this horizontal resistance level at that $12 price point. I would be interested in it. And a lot of this is all program driven too. So I'm not even going to say that asset managers, as far as the overall market, are excited one way or the other, because this is largely program driven. Alert, 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 nothing triggered. Didn't get the setup that I was looking for a possible short in here. No harm, no foul. I'm just waiting. Let's see. Entered shorts at 1050. Pretty confident. Stock picks, SPY bounce. They lost their relative weakness. Well, give me a stock. Let's take a look at it. It's kind of hard for me to comment when I don't know the stock. Did you pick a good stock? You're confident in it, but was there a sign that it might not have been a good pick? And yes, you're going to get some stocks rallying for sure like this. So why don't you post the pick and we'll take a look at that, and then we can kind of get exact with what you were doing and what you were looking at. NVIDIA, Goldman Sachs conference today. How do we like NVIDIA? NVIDIA looked pretty good this morning. It was actually fairly strong relative to the market. QQQ was strong relative to the market. Like that breakout right there above the 100-day moving average. Market sold off today. NVIDIA pulled back, but it was not down after a 100-point decline in the S&Ps. It checked the prior close and then off to the races on heavy volume. Yeah, I like NVIDIA here. I think NVIDIA is going to continue to move higher, and it's got room to that 50-day moving average, higher low. So yes, consistent with ARM, which is the long, also looked pretty good. Uh, all right, let's see here. EL, any opinion as to taxing unrealized capital gains, how it would affect the market? Uh, you know, Yes, I've got an opinion on that. Well, as a trader, I'm always wanting the lowest possible capital gains tax, but I'm being selfish and self-centered because I want to make as much money as possible. But as far as the overall market moves, I think Warren Buffett said it best. If he sees investment opportunities, he's not going to let his capital gains tax determine whether or not he's taking positions. He is going to take advantage of that opportunity. Uh, but also, in line with Warren Buffett, he has been reducing his position size dramatically. That is nothing to do, well, I shouldn't say nothing to do with corporate tax rate. It has more to do with valuations and the models that he uses than it does with capital gains taxes. And he just had an investor or a shareholder conference, so you can go back and look at what his comments were. But yeah, if the valuations in the market are attractive, asset managers are going to be deploying capital because they want to take advantage of that upward move, regardless of what the capital gains taxes are. If valuations are extremely stretched, no matter how low the capital gains taxes are, they're not going to be investing money. So I hope that makes sense. So the long and short of it is, I don't think that it makes that much of a difference. PSS short, take a look at that. KSS. So here's the issue with KSS. Look at how many times it's touched this support level. Every single time, that looked like a good breakdown. That looked like a good breakdown. So it has lots of head fakes in here. And so you just can't trust it until it closes below this low. All right. So it can't just trade there. It's got to close below the low from today. Then I think you've got a chance for this move to gain some traction to the downside. But until then, sell off bounce, sell off bounce. Wouldn't touch it. NIO, broken SMA. Be fairly careful with China. China's economy is not doing well. And you can see the reaction after earnings there. So this was nice. It's through that 200-day moving average. That's nice. It's been able to preserve most of that long green candle. That's nice. So everything technically looks pretty good on NIO. And let's zoom out a little bit, get a longer term perspective on it. It's been on a very steady downtrend. One of the issues, this is more fundamental, so it's not something you would see by just reading true price action, is that China is currently going through a deflationary period, which is very, very dangerous because it means that consumers are pulling back. So you might want to read up on that a bit. There is a glut of EVs right now in China. And so that means that prices are going to be depressed for a very long time. There's a definite supply issue, overcapacity issue, and the demand side is also an issue. So I would be very cautious with NIO. From a technical standpoint, you would want to see it go through this resistance level, and if you get that, then you can trade it, but just use some caution. You don't want to see it give up more than half of this long green candle. So that would be your stop. I personally wouldn't take the trade, but if you're just looking at technicals, you could justify getting long on a breakout above that high. What's a good strategy for trading IoT? Well, again, here you would want to wait. Uh, nice breakout. Everything looks good. It's been able to hold its own. I like to wait for at least 5 days, closer to 10 days is preferred to make sure that the stock doesn't roll over. And then that would constitute a failed breakout. But it's been able to hold the gains pretty well, especially last Friday when the market sold off hard. So the fact that the stock was able to do that, this is all a good sign. So you would want 5 or so more days to elapse with it inching up to this high. And in particular, when you get a big market drop like today, you want to see the stock hold steady, just as I pointed out in ARM today. That would be a sign that buyers are lined up and that some of that supply is worn off and that it's ready to inch its way higher. Now the SPY did not go down. What am I doing? Well, we are right at the previous high, so this is a resistance level. We are also within probably 30 cents or 3 S&P points of the 50-day moving average. How do I know that? Because I know these things. I study charts. I look at everything. I prepare myself like Tom Brady would prepare for his next opponent. I know where these moving averages are coming into play. What would I do? I sure wouldn't be getting long until I had a convincing breakout above that 50-day moving average. Blow through it, okay, I can consider taking some longs. But until then, I don't have enough upside potential to this move in the SPY to justify taking a long position. So I wait. Maybe in that time, I start to see something that starts to turn me a little bit bearish. But this is a very powerful move, and we're getting what we call a bearish or bullish, excuse me, divergence, where we have one OP moving lower and the market moving higher. So that's kind of a bullish event. Normally, if this is heading lower, we'd expect the market to be heading lower. When this is heading higher, we expect the market to be heading higher. When this is heading lower, we expect the market to be heading lower. So that is a bullish divergence. That's not to say that this cycle can't complete and we get that bearish price action. So we got to be patient in here. But for right now, it's kind of bullish up on that 50-day moving average. I do nothing. All right. Well, we are at about the hour and 15-minute mark, and my voice is starting to crack a little bit. So I think we're done for today. We'll take a quick look at my bullish pick first, ARM. ARM. I love the fact that it's through this 100-day moving average. I love the price action today. I love the volume today. So that's my long pick. And on the bearish side, I liked TGT Target. And you can see it's got a little bit of a bounce in here, but nothing dramatic. Still well below the prior day's low. Didn't participate to any great degree with the market rally. And that D1 chart is weak with a breach of that 50-day moving average. I want to see that 50-day moving average preserved. I want to see resistance there. Certainly don't want to get above the 100 and 200-day moving averages right up in here. Not expecting that to happen, and it's got plenty of room to the downside. As far as the overall market, I think we're going to see more of this type of price action, and I don't see us moving that much between now and the FOMC statement a week from today, because we've got a lot of that's going to be a major news event. Could we poke above the 50-day moving average? Sure. Why not? Uh, Waffle around at the 553 level right in here until that FOMC statement comes out? Yeah. Would I get aggressively long? No. Really in day trading mode right now, just trying to make some money while we wait for the market to figure out what it's going to do next. Thanks so much for watching, everybody. I will be doing a video on Sunday, and a week from today, we'll be doing a live event, and I'm sure Harry will be joining us then as well. So thanks. Trade well. We'll see you then.